Hey, what up, traders? It's Lex. Today is Wednesday, November 13th, 2019. Now, I haven't made a video in a very long time, so I wanted to make a video today on a post-trade analysis on my Facebook calls that the trade went really well and everything lined up perfectly. And I had a great entry and it was very stress-free. So I was like, you know what, it's time to make some videos. I apologize. I've been really busy the past 3 to 4 months, and I've been traveling and doing a lot of stuff with music. So going forward, I'm gonna try to stick to my plan of making some more videos like I was last fall. So anyway, let's dive right into the trade. So my trade was Facebook, and this was a post earnings trade. And if you've been following the markets have been on a tear the past pretty much past like 2 months, but more recently the past 3 weeks. We've had overall markets, the SPY, Dow, and the Qs or Nasdaqs hitting all-time highs. And a lot of the stocks, growth stocks, momentum stocks, value stocks have also been hitting all-time highs. And they've been crushing the earnings. Now, I never buy stocks before earnings. I always wait till after earnings because it's basically gambling. Even if the company does really well and they beat earnings and they have good forward guidance, that doesn't mean the stock's always going to go up. And the reason for that is because a lot of traders have been building positions going up until the earnings from a few weeks out. And then if the stock rips, say 5-10% after earnings, the next day there's usually a sell-off, usually a big dip. And especially because the stocks have been hitting new all-time highs, and when they do beat their earnings, they have been selling off. And that's exactly what happened with Facebook. And the other reason why I don't buy before earnings is because the premiums the day before or on the day are extremely high. So even if you get in a good position and it does beat earnings and say the stock does go up, it's still, the premiums are so high that there's not much left value in the premiums to sell it the next day. So you always want to react to the earnings if you're trading. If you're investing, it's a whole different story, but we're not investing, we're trading. So Facebook's been on my watch list just because it's a good company. I don't like Facebook. I'm not even on Facebook. I deleted my account years ago. I dislike Mark Zuckerberg. I can't stand the company. I cannot stand Facebook. But I will trade it because it's a good company and it has good price action. So leading up until the earnings, it's been kind of choppy because they've been doing a lot of court hearings and they've been getting some backlash with government regulations about all sorts of stuff, from Russiagate to spying on customers and all that hoorah. But leading up until earnings, it's been kind of choppy, and it's been lagging in the overall market, meaning the SPY, the Qs, and other stocks, their peers in their industry, like the tech sector, the Nasdaq, like Apple, Roku, AMD, they've all been cruising to new highs and ripping. And Facebook hasn't. It's been lagging. It's been lagging the overall market. It was actually down from its recent highs almost 10 to 15%. So that was the first reason why I was looking at it, because it had great numbers. They beat their earnings. They crushed their numbers. They beat their EPS, and they beat their revenue and got new subscribers, and they had solid forward-looking guidance. With all that being said, the stock sold off hard the next day. So here's earnings right here. So when earnings came out on October 30th, it ripped. I mean, it literally went from $188 all the way up to $200 after the earnings call. And what happened the next day? Exactly what I was mentioning earlier. The stock sold off, right? It sold off. So that was my reaction. That was the time I was like, okay, now it's time to start looking for an entry, wait for consolidation, because they did have good earnings, they did have good guidance. So I wanted to wait a couple days and find a good entry for it. So it sold off. It had a nice little bump 2 days after, and then look what happened here. For 1, 2, 3, 4, 5, 6 days, it just faded. It had a nice steady channel fade for 5 days. And I was just waiting, sitting back on my watch list and just waiting for the good entry point for me to start building a position. So after 7 days, I noticed that it was approaching the 20-day moving average. So I was like, okay, let's look here, the 20-day moving average. Let's move it up to the 15-minute. So you can see in closer. And the overall markets that day were hitting new highs. Apple was hitting new highs. AMD was hitting new highs. Microsoft was hitting all-time highs. And the stock market, the SPY, hit an all-new record high that day. So what I was waiting for that day was, the bounce off the 20-day moving average, and also this technical breakout from this down channel flag, this big, thick blue straight line. As soon as it broke that in the morning, in the first 5-minute candle here, first 15-minute candle spiked, that is where I took my first position. I bought some calls. And I went out 2 weeks because I wanted to give myself time to build a position. So I went in and I bought the 197 call in Thinkorswim for 85 cents. And I also bought another 197 call a week and a half out, the same strike price and same expiration, November 22nd, which is next Friday. Both for the same strike price. I got one. I'm sorry, no. One was for 200, one was for 197. I apologize. And so the same expiration. One was for 85 cents, and one was for 42 cents. And I bought them about 10 minutes apart. It dipped a little. That's where I bought my second call. And I wanted to build a position. Now, I was thinking I was going to hold this maybe until the end of the week because it's been lagging, and I was like, it's probably going to go reach up and test its prior highs from the earnings, which was 200, which is also a psychological level, 195, 200 even numbers. So I was planning on holding this, maybe for a week and a half. So the first catalyst was the earnings beat, which was about a week and a half prior. The second catalyst was the technical breakout, as you see here, the 20-day moving average and this break of the downtrend of the flag. That's the second reason why I bought it. And the third, not really reason, but the reason that really confirmed my trade, which was kind of luck, is that Facebook had a huge catalyst that day that no one knew about, and they announced Facebook Pay. Facebook Pay is now going to allow you to use, it's in conjunction with PayPal, and they're going to allow users to make payments across all their platforms that they own, which is Facebook, WhatsApp, Messenger, and Instagram. So on all those platforms that they own, they're all intertwined, and you can actually use it as a paying sec. So they're getting into the fintech industry, and they're collaborating with PayPal. So that was the big catalyst that really made it rocket out of the gate, and the whole day it just ripped. And it kind of moved a little too fast, too quickly. And that is one of the reasons why I didn't hold my position as long as I wanted to, because it went up way too fast, way too fast. Let's also take a look at SPY that day. SPY ripped as well the day I bought it, which was yesterday. And this is yesterday. And it hit the all-time high of 309. Okay, that's the all-time high in the SPY ever. If you look at its future relevant, the ES futures, that hit its all-time high of 3,102. So this was all, 3 out of 1 out of 3 stocks trends the market. Sorry, 3 out of 4 stocks trend with the market. And if you look at the market internals that day, if we take a look at the stocks that day, this was right here. You had more advanced stocks. This is the breadth of the market. You had more stocks advancing than declining. If you look at the advanced decline line that day, which is right here, you had well over more stocks than declining, and the tick value rater here on, you can't see because this is today's day, but there was more upticks than downticks. So the overall market strength that day was to the upside. So that also confirmed my position. Now, the reason why I didn't hold it until the expiration is because, like I was saying, it just moved way too fast. It moved too fast, and there was no consolidation. I was trying to swing trade that. So I was actually thinking about selling around the market close because I was already up over 150% on my trades, both calls. I actually ended up selling it, one of the calls for 176% gain and the other one for 139%, I'm sorry, 129% gain. Those are awesome gains, and that was all under 24 hours, an overnight swing trade. But the reason why I didn't sell it at market close is because the strength at the close was at the high. And I was also thinking maybe I should sell it at market close because the markets have been so choppy due to overall market conditions with, the president and the trade war. And, the trade war has been causing whipsaw action because headline tweets from the president will literally move the markets 10 to 20 handles on the SPY. I'm sorry, or on the ES futures. So it's very, very dangerous in these market conditions to hold overnight because Trump will come out and be like, oh yeah, there's a trade, the trade war is growing great, we're having progress with China, and literally will spike the market up 10, 20 handles on the ES. Or he'll be like, yo, the trade war is going well, but if, ball's in our court and we will keep increasing tariffs, increasing the price of the tariffs until China concedes, and that will just tank the market 20 candles. And this happens literally every 48 hours. So it's very, very dangerous to hold stocks overnight, especially when they're hitting all-time highs, because it's just like, where can the stocks go? But with Facebook, because it's been a laggard, it's more, I feel like the path of least resistance is to the upside because it's down from its highs of 208.66. So that is one of the reasons why I got in it, because it was a laggard, but also another reason why I held it overnight. Now let's look at today when I actually sold it. In pre-market, it actually got higher than its previous day's highs. And I wanted to see how the market was going to react. Let's actually scroll in. Oops. And at market open, I had this big red candle. So I was like, this might not be good for the rest of the day, and I'm going to get into why. But this first red candle actually dropped 1 penny. So I'm like, I got to get out of this trade and take profits. I'm already up over 100%. So I sold on the third candle and ended up with a solid 176% gain on my first call in Robinhood. My average cost was 42 cents, and I sold it at actually 115, not 116, so that's a little off. So it was $73, about 175% gain. And then my TD Ameritrade Thinkorswim, my trade price was 85. I sold it at actually 196, so that should be a little higher. And it was actually 139% gain. This is the gain on the actual day, so don't pay attention to that. But so that was two solid trades for 175% and 129% respectively for the two calls. Now, the reason why I got a little nervous here and I was selling after this red candle is the SPY and the ES was tanking the entire morning and from its recent all-time high the previous day. If you look at this, the previous high was 309, and it literally faded the rest of the day all the way to market open, where it was at its lowest, which was almost as low as its 2-day prior low. So I was thinking to myself, shit, I got to take profits on this call because the markets are actually going to sell off and it's probably going to take Facebook with it. So that's why I sold right at market open. And when you're up over 100%, you gotta be careful and not get greedy, especially in these market conditions. So I'm glad I sold where I did because Facebook today actually ended up selling off. So anyway, I gotta go. Thank you for watching the video. Feel free to leave a comment or a question and Check out my YouTube channel for some more videos. I have a bunch of them. Take care.